This video is brought to you by the award-winning prop firm, Fidelcrest. Alright folks, welcome to this video where we've got Alyse in the house now. We've just done an amazing podcast, link below the video, where she tells us about how she quit Uber to become a day trader and is now trading 7 figures at a fund. And today you're going to learn that strategy which wins 80 to 90% of the time. And it's all track record verified over there on the internet. Welcome back to the show, Alyse, and let's share your screen. Fidelcrest is an award-winning prop firm that funds traders with up to $2 million and offers generous profit splits up to 90%. So what sets Fidelcrest apart? Well, it's their verification stage payouts of up to $30K in as little as 15 days. So you can receive your first payout prior to becoming a fully funded trader. Just complete the challenge phase and verification stage without violating any rules to receive your first payout. And be sure to use promo code TradingNut, all one word, to get 10% off your next challenge. Click the link in the description below or the card above to find out more.
I wanted to do gold. I think a lot of people have either, well, it's sort of a love-hate, but people who love it, and people who don't. But I do think it is a favorable pair that a lot of people like to trade. I do understand technically it's a commodity, but this is what I trade, so that's what I'm going to go over. All right, so when it comes to the Forex version, of course, it's going to be gold USD. I did want to kind of put some key points in here. I'll delete this in a second and kind of zoom in and look at the actual entry parameters, but I will kind of give you an idea of what I look for, right? So I like to identify liquidity. So equal highs, equal lows, support resistance, that's fine if you want to call it that. But basically places where previously a lot of people have taken positions, there's going to be a lot of stops, a lot of orders, a lot of volume around there. So I'm looking for liquidity in regards to that. There's also trend line liquidity, right? So this would be equal highs, lows. There's that type of liquidity. Trend line liquidity would be basically once it goes through that and there's liquidity and stops past all these areas, right? So like this area right here between all these cells is going to be stops and orders behind that area, and then higher time frame, right? There's higher time frame liquidity. And then I also look for high volume wicks or high volume price action, right? So this can be like supply and demand zones, right? This could be potential supply zones. It could be potential demand zones that have previously been traded, or like points of interest. Everybody has different lingo, but it's sort of the same thing. But what I am looking for specifically in those areas is that the previous move had really high signatures of like institutional backing, either by volume or like that price action. Again, like engulfing, some people call them vortex candles, whatever the name is that you call it. I'm looking for a signature that there was a big move there and a lot of volume was at that price. All right, so I also like to establish or create sort of like an A to B trading range. And you can do this with small time frame and high time frame. Typically, the higher time frame will be considered more like, I put internal. That's supposed to say internal and external liquidity. Okay, so external would be more so like higher time frame, maybe like, equal highs or lows. Internal may be smaller liquidity inside of that range, right? So I am a combination trader, so I do scalps and intraday, but the higher time frame will kind of show, I'll kind of be using that like external liquidity in terms of highs and lows, the supply, kind of the stuff I mentioned here. And I kind of try to establish a range, and that's kind of like what all these zones are here, okay, which I'll go over in a second. And lastly, I trade those areas of interest that I basically have now labeled, right? So if you look at these areas that I've labeled, there's definitely entries and volume in at those prices. And I'm establishing a range of where I'm kind of trading in between there. And if you look at this move, you see how it moves in between it, right? So those are the things I'm looking for. So now that I have that, let's go ahead and get rid of this. And let's move in. Okay, so basically this move here obviously is a nice, you can call this, equal lows, or you can consider it off the first move, a potential demand zone area of interest that obviously had a lot of volume there and a lot of buy volume there, right? And then when it comes to the top side, we have this area, these equal highs, in line with that trend line, so there's a lot of liquidity here and whatnot. This area with the area of interest, anytime you're looking at a place, let me zoom over, at a place that's been used a lot, you can look at it, to the buy side, the sell side, areas of interest like that. So I'm looking for signatures of where a lot of volume has been and likely to revisit. Okay, so when I kind of mention those areas of interest, where I'm looking for reversal or continuation, like those areas of interest are the ones that I'm looking for, right? This one previously, when it came up here, reversed, and now it's potentially be using for continuation over here. So once I establish those areas of interest, I'm going to be going in on a smaller time frame, and then I have my trading range, right? Now, one thing I do want to mention for liquidity, because I do feel like a lot of people get caught up on this, is a lot of people, when they're looking at external liquidity, they're always looking for it to be taken and then like a reversal happening. But again, the scenario is only reverse or continue. So, because the thing is like the volume here can actually fuel the trade to continue, right? Because in the market, the way that the order exchange works is that buyers need sellers and sellers need buyers. That's the way that the trades execute and the order exchange happens. So if you have an understanding, then that means that like all the sellers here can actually fuel this buy. And plus, if it's been in a downtrend for a long period of time and we have all these bottoms and it's clearly not showing want to go lower, like, yes, there is technically liquidity here, which can be used in the future. And that's another great point to make, actually. Just because there is liquidity there doesn't mean it has to be used now. They're going to use it when it's ready. But nonetheless, what I focused on here is the fact that the bearish trend had not been continued and that this liquidity here from this internal liquidity inside of this larger range, right? I had this larger range established. But this internal liquidity may actually be used to break out from this trend line next to these next two zones. Okay, so that's what I was looking for here. So when you zoom in, I'm going to be looking for these wicks. Those give me really good areas of interest where previous volume was, and then basically zoom in for entry. Now, you'll see when I do have some zones, and that's going to be based off like blocks, you know, like supply and demand blocks and whatnot and things like that. But I try to, as often when I can, to have a specific price narrowed down all the way to a line. The reason why I do that is I'm looking for my entry to be at that price specifically. If it was very reactive before, it'd be very reactive again. And then I'm going to trade it in line when I usually trade. Okay, so I was looking for the buy side on this move. This was a one-day move that was beautiful and worked out nicely. Also continued to the next zone, right? So now let's kind of zoom it in. So if we're looking for an area of interest, keep it simple. Basically somewhere around this wick and like this potential, you know, some people call it imbalance, FEG, whatever you want to call it, but somewhere in this area I'm looking for reaction, but this specific price is mainly what I'm looking for. All right, so hold on, let me get rid of that. Okay, so now I'll kind of do this just to get it there to give you an idea of what that would look like, but I'm going to, oh, I did that backwards. Try again. But I'm going to give you more specifics of how I narrow down the entry. Okay, so this will just be the initial zone. Or the initial zone, I'll do the full range that I had originally, okay? But I'm going to show you how I narrowed down that entry. So let's keep it here and then let's go on a smaller time frame. All right, so the beauty of having a specific price listed, and if you're actually trading it during market hours and reacting in that zone, if this is gold, sorry, I'm going to move this other way so you can see the time. If this is gold and I'm trading it at 8 a.m., I'm not trading at this time, right? This is during London. This is preparing during London. I already went in that zone, and as you can see, volume here is backing that move, right? By the time I start trading it, it's going to be about 8 a.m., and I see that this move has already started and initiated from the zone of interest, and that volume has been added, and that they're starting to go in here. So because of the fact that they've already established a low and started this move, now when I take an entry at 8 a.m., when I take an entry at this time, my stop is going to be past the previous low. So I basically almost halved that potential range that I was looking at. And now when I'm getting in, pretty much if it goes past this stop loss, then this entry is invalidated. I'm looking for a lower entry. So the one thing about my stop losses is that it does invalidate that trade. Now, it may not invalidate it overall in terms of like a higher time frame move, but at least for that smaller time frame entry, that one is not good anymore, and I need to either wait for it to come back and take it again or look for a different zone. Nonetheless, I would have entered at 8 a.m. My stop is behind that previous low. Also, another point to make in my stops, if I think it's going to come to it, I don't do it exactly at it. I do a little bit past. Brokers tend to open up spreads at stop loss to knock people out, and you don't want to have it go to the same price, knock you out by a pip, and then go how you want. So I kind of open it just a little bit. All right, so I wanted to recover that liquidity to that previous zone. And then there's that trade right there, right? So you can either take it to the bottom of the zone. That trade right there, we'll just round it, say 1 to 7. If you take it into the 50 of the zone, it's going to be about we'll just round it 1 to 8. Now, if it ends up being more of a swing trade or intraday, then you're going to take it to the next zone. And that's going to make it, a 1 to 16, 1 to 17. Now, do keep in mind that I'm stacking entries along the way. So I tend to stack entries, especially if you continue in the momentum to the upside. So, the other trading days, okay, let's look. So this one is around that same trading hour, right? So now you can basically do almost the same move on a smaller time frame a second time. The momentum is still showing me bullish. It still has that nice impulse. It's just basically doing consolidation zone, setting up the next move. So I'm going to move this over a little bit. All right, so when I'm coming in that day, 8 a.m. is about this time. It basically just closed past these previous highs. And I really have to kind of zoom in for this, but pretty much just a simple break and retest, the way that people see once it clears that high. Again, once you have that zone, it's either going to validate it and continue up, or it's going to invalidate and go lower. And if it goes lower, then I want to be out of the trade and look for a different area to enter. So quite simply, pretty much the same thing again, right? So you can take a long position around the open. The stop is going to be behind the previous low. And we're going to take it back to the buy side, that next zone. This one's even tighter stop, so this one ends up being even better. Now keep in mind, these are the more intraday positions. The scalps would typically be, just 1 or 2 of these candles in here. And so if I have a big move on that initial impulse, you know what I mean? I'll be able to take some partials or close scalps there. But the intradays are the runners. So basically when the scalps, I call them like the bag trades, where I just take that initial momentum and take that out. And typically I hit my target. My 1% or 2% target for the day is already hit with my bag trade, the scalp. And then my runner will be the one that I leave running to the full target. And then that one is just basically secured, either slightly in break even, and I let that one run. So, and I go along with my day. And I will set alerts, like let's say that it is a larger range, and if it has a place where I want to take partials, that I'll set an alert, go on with my day. And then if it alerts me, I'll either secure it more. I typically like to leave it near the entry, so I'll usually just take a partial and then let it finish the target. If it gives me another entry opportunity, sometimes I'll take another entry. It just depends on if it sets up nicely. But yeah.
And do you ever move your stops closer to sort of into break even or anything like that?
I prefer to do I never like to do just a break even. I do it past covering the spread and the fees, because that actually adds to my limit, right? Because if you put it at break even, but it doesn't cover the spread or the fees, then it counts as a loss. So I actually put it a little bit past, because if it does come and take me out, I don't want it to count as a loss. I would rather take out a little bit of profit. So one of my trading rules is that the trade only ends in 1 of 4 ways: big win, little win, break even, for me, small win, like smaller win, or a small loss. That's the only ways it's ending. And the small loss is already a calculated risk. It's the amount that I know that it is, that I already understood that I was risking, and that's it. Nothing more than that.
Hey folks, you ever wonder what broker I use? Well, I use HenkoTrade. It was a no-brainer because I was looking for a broker with good trading conditions and one that wouldn't restrict my leverage. Now, by joining HenkoTrade, I've also cut down my trading costs significantly with their super low commission of just $1 per 100K. You can learn more at henkotrade.com or just click the link I've put in the description.
But yeah,
brilliant. Well, look, that was a great rundown and overview of how you take these trades. Fantastic stuff, and I'm sure people can go back and have a look at that because there's so much information in there. Now, if they're looking to find out more, what's the best way for them to get hold of you?
Yep, I would say Twitter or Instagram, same handle, Alyse, ALYSE _VMV. And
brilliant.
That's it. Really
well, look, as mentioned at the start of the show, we did do a podcast, and it is top drawer. Go and check it out. Link underneath the video here. All those links will be on that page, so you can just click them instead of having to type them in. And also, whilst you're down there clicking around, click on that subscribe, like, and notifications bell, and click all, and we'll see you in the next video.